Hey, good morning. Let's go over today's trade plan. So the main catalyst this morning was the employment report, and even though off the report we initially saw some selling, overall the markets have stabilized a bit, and the day time frame does not have to end up being very bearish throughout the day. So off the open, we're going to keep an eye on 90 to 92. We're going to use that as the bull bear zone. Above that, we have the prior VPOC at 93, and if the market's holding above that, that would just further confirm that this is not a balanced breakdown scenario. So in the event that we're holding 90 to 92 and 93 off the open, that would open the door for continued upside movement. The main resistance area at this point off the open is this 95 half to 97 quarter, followed by 2175 to 0275. If we can take out 95 half to 97 quarter, that would most likely result in a break above 2175 to 0275, but that is valid resistance until broken. Looking at the other markets, again, they're relatively stable and are holding up quite well. So far, this test below the 90-92 area seems to be developing as a tail. Of course, we don't know if that's going to end up being a tail after the open or not. We'll have to just watch and see. But just keep in mind that unless the other markets do continue selling off, and unless ES starts holding below 90.92, the entire day does not have to end up being bearish. And so far, the reaction off of non-farm payroll report has been pretty muted, nothing really huge, and for the most part, the market is still just kind of trading in a range here and trying to figure out which way to go. And given how well the Russell is holding up, this can still turn around. So we do have to be a bit cautious getting too aggressively short or too aggressively bearish near the bull bear zone at 90.92. So if we're holding that area, it would still leave the door open for buyers to step in. A breakout above 95 half to 97 quarter could trigger some more upside movement, and above 2175 to 0275, it would be a confirmation that the buyers are gaining control, and at that point, most likely we would go up to 06 half, 07 half, minor area, and the main objective above initial resistance is 10 to 12 half. That's still a zone that can provide a reaction, but if the balance lows hold, then even 21.10 to 12 half doesn't have to hold, at least longer term. Then that's a zone that can be taken out even on the day time frame, and the market can fill the gap at 21.16. So that is the upside scenario in the event that the bull bear zone holds and we actually break out above 95 half to 97 quarter, which is the main inflection point on the upside. In the event that the market starts holding below 90 to 92, then we can actually go down, take out the overnight low, and test the 79 quarter to 82 quarter initial support zone. The first test of that area can still attract responsive buyers, but at that point, just keep in mind that the context would be suggesting a complete balance breakdown below 90 to 92. So initial support, although it can provide a reaction, does not have to cap the downside. We can go lower to 77 quarter and the 74 half high volume node quite easily, and even test 68 quarter to 70 quarter, which is a pretty decent inflection point for a reaction on first test. And by that point, even the range would be quite exhausted. So down at 68 quarter, 70 quarter, especially 63, 65, those are range extremes, and they're also very decent support zones on first test. So those zones do have potential to cap the downside, shut off the selling, and then reverse ES back up towards 79 quarter, 82 quarter, potentially even a bit higher, depending on just how the day develops. But those are really the two primary scenarios. 90.92 is really going to help dictate which way this market's going, and looking at how the other markets are shaping up so far, we do have to be pretty nimble with our directional bias here, because bigger picture, if we hold 90 to 92, then this is just going to be a tail below that large balance area. And since we're trading near the balance area lows here at 90 to 92, if that zone holds and we start seeing some buying come into the picture, then we can get a pretty decent upside move just as easily. And quite easily go back up to 10 to 12 half. That would be the primary upside objective then if we're holding bull bear zone and we break out above 95 half, 97 quarter, and we're taking out 2175, 0275, which would have lower odds of holding if we break out above 95 half to 97 quarter. That's really the main inflection point. That's the area that was really in play right off of the morning report. So if we take that out, most likely we are going to go significantly higher. But considering that we are still trading in a bigger picture balance, it requires that flexible mindset, that nimble bias. So off the open, let's just see how the market reacts to 90, 92, 93, 95 half, 97 quarter. That will help set the bias for the entire day, and we will focus on trading in that direction. So those are our main ideas. Let's see if the buy side can hold it up, bigger picture here, and we'll take it from there.